Welcome everyone to the Noble Helium webinar. Today I'll be joined by Noble Managing Director and CEO Shaun Scott, as well as Noble Helium Chairman Professor Andrew Garnett. I'll hand over, without further ado, immediately to Shaun to kick off the webinar.
Great, thanks Gareth. So the plan today is to run quickly through a short presentation that we've prepared to hopefully give some new information, answer some questions, etc. about where we're at, where we're heading. So we'll run through that, and then we've had quite a few questions that have been submitted ahead of time that we'll respond to, and also obviously field questions throughout the course of the presentation. So I guess just to start off, I'm just trying to move Gareth out of the way. There we go. Why are we interested in helium? I mean, I think I've shown this slide quite a few times, but I think it's still really relevant and important in terms of why we're trying to do this. The value proposition for helium is significant, and that then brings a significant number of opportunities. But of course, the reason that it's high value is because it's hard to find. There's shortages going on in the world now, and there have been for some period of time. And as we all know, a significant portion, 95% of the world's helium is currently produced as a byproduct of natural gas. And certainly what we're trying to do is to move away from that to something that's not produced for natural gas sake, but produced for the sake of helium. So fantastic value proposition. The market is substantial, currently about $5 billion, predicted to grow to about $8 billion. And I think everyone now has a good feeling for where it's used and why it's so important. Obviously, semiconductors, MRIs, rocket launches, etc., and all of those areas are growing. So plenty of opportunity for us to fit into that space. So secondly, question I get quite a bit is around Tanzania and why Tanzania. Very unique geology in Tanzania. Basically, what you've got is the Tanzanian craton that sits right in the middle of it. So helium's produced through the radioactive decay of uraniums and thoriums in the crust. And so it has about a 4 billion year half-life. So you need crust that's the right age to have developed an inventory of helium in that crust. And typically what happens is that it is just micromillimeters out into the surrounding hard rocks that form the crust. And so we've obviously got the right aged crust that exists in Tanzania. But what's unique in Tanzania is that we've then caught up in the East African rift system, and you can see those red lines that are on that map indicate the rifting system that exists, and obviously where we've pegged our acreage is no surprises coincident with where that rifting is occurring. And what that rifting is doing is then breaking up that crust and in the process liberating that helium out of the hard rocks into the surrounding geology, which in our case, as we've demonstrated with our activity so far, is younger neogene reservoirs, which are highly permeable and certainly demonstrate all of the characteristics that you want for flow. Gareth, can you move yourself? You're right in the middle of the presentation there, or make yourself smaller or something. There we go. Good. And then, of course, Tanzania itself is a great place to operate. Very safe. We've been there for nearly 8 years now. Never had any issues from a safety perspective. Very supportive government regime. Certainly down in the Rukwa in particular. Lots of support from local landowners. Actually, quite different to the experience that I've had and having in Queensland, trying to get gas projects up and running. It's a much different environment. People are very keen to see us be successful and helpful. Easy access, robust processes around the environment and other things, but very transparent, straightforward, and certainly makes sense. So it's a great place to do business. Since the change of president about 4 years ago, they've really opened up for investment from overseas, and we're seeing a lot of transactions happening. BHP into the Kabanga nickel project, a number of lithium projects, etc., that are all kicked off again. And you would have seen earlier this week we announced we've received our initial refund of VAT from the government. So I guess as hopefully damping down any concerns people had about sort of the financial risks of working in Tanzania as well. So that's quite positive. I'm now going to hand over to Professor Garnett to just talk a little bit about the work that we've been doing with all of the data that we've been gathering through our exploration program and our wells, and the bigger picture that exists in the North Rukwa, North-Nyasa area.
Okay, thanks very much, Shaun. If we move on to the next slide, Gareth, thanks very much. So if you remember that picture that Shaun just showed with the big blob called the Archean basement, well, what I've done here with this map is just move it to the bottom west corner, in the southwest corner of that map. And on this figure here, you see what we've called a Rukwa-Nyasa play fairway. It's a fairway in such that the stratigraphy is the same, the old basement's the same, the opportunities for casting's the same, and there are a number of different opportunities, in fact, a large number of different opportunities just in this segment alone. So I won't cover those Iyasi and Manyara areas today. I'll just discuss about these and why particularly these. Well, the first one here is just to get our heads away from where everybody's anchoring in the US. So you'll read all of the technical literature in the US about this 0.3% being a number which is relevant to the US economics and the US helium habitats. It's actually not relevant to us. It's a different helium habitat. It's generally with gas over there. It's not an active basin. It's not got the old stuff that we've got. And so these numbers here just show the relative differences. If we look at the average across the data points we've got, wells and hot springs, where average is about 7.4. The average in the USGS database is 0.3%. So it's just not at all analogous. And our average sample value is actually a hot spring value is 18%, and the average across all those 16,000 data points plus in the USGS is only 10%. And you'll see they must have a very skewed distribution there. So unfortunately, the market's sort of anchored in expectations from the US, and Tanzania just isn't that. It's the sort of classic Dorothy, we're not in Kansas anymore. Or for that matter, Arizona or any of the other places. So what we have is the most, probably the most prolific helium province for sound geological reasons. If we go to the next one, Gareth. Yeah, and no, number 2. Other way. Other way. That's it. So within this province, what we've managed to do, if I moved it again, there you go. So within this province, what the teams managed to do is actually peg the right real estate, first of all. So if you see this map on the right here, I split this, roughly speaking, into the areas of west and east of the lake, the northwest of the Lake Rukwa, and the North-Nyasa project is downtrend. It's a little bit off this map, so we've just moved it up for illustration purposes. So all of our licenses in this area are 100% owned. It's about 2,500 square K. We've got toll PLs. Under this basin, we've had this uranium sitting there for way over 2 billion years, chucking out alpha particles, helium, waiting to be trapped in groundwaters over a number of phases of risting, which we have. And then right on top of the basement, we've got this Karoo sediment, which is Permian, for way over 220 million years, sitting there receiving hot groundwaters full of full of helium for all these years. So it's got all of the long-term nature that we have, plus the tectonics, which allow us to form traps. If we go on to the next slide, please, Gareth. So what we have actually is these 4 areas: Northwest Rukwa, West and East Lake, and then south, in the south there, North-Nyasa project. They're all independent insofar as the systems in there, if one of them fails, it doesn't mean the system fails in the other. There are stacked plays, which in other words, we stacked reservoir seal pairs, one on top of the other, which gives us more than one bite of the cherry. And because of this phasing of tectonics, we've got a number of physical structural traps to collect gas in. Within that set alone already, we've got the appraisal target, which Shaun's going to talk about in a moment, in Mbelele Shallow, 3 technically drill-ready prospects in terms of the geoscience, and way over 10 leads actually, which need a little bit of seismic or gravity or something to firm up. So it's a rich area, lots of rolls of the dice. Going to the next one, I'll just show you a little bit what they look like. What I'm about to show you is a sort of west-east, roughly, cross-section across the lake. On the left there, we've got 2 areas that look like that. That's the West Rukwa Lake, and then the Northwest Rukwa, where the lake used to be, actually, and is now on shore. We've got plays like Mbelele Shallow, which is actually even shallower than we've mentioned on this map. And then stacked on that, Neogene Green, and then some Sungway and Galula, and possibly even Karoo, as we move slightly down flank and into the lake. On the east of the flank here, we've also got 2 areas. We've got the eastern Rukwa Lake. We've got prospects like Chili, which is probably our best prospect so far. And we've also got the North-Nyasa prospect, which project looks like this. As we go from west to east on this map, on this cross-section rather, we see that the Karoo, which is the primary target, that's the stuff that's been sitting there soaking in helium for well over 250 million years. It's sitting there soaking up helium. There are traps formed. There are seals formed. In fact, on the east of this map, there's even a little bit of coal, which will push out some methane and help us with gas generation. And interestingly, as you see illustrated on this map, there are stacked plays. So drilling the Karoo gets us to test other things on the way down. So very rich in terms of acreage, very rich in terms of plays, and very rich in terms of prospects, and all of the right geological criteria for hitting that rich world-class helium province, especially in the Karoo supergroup. So if we move on, I think we're going to move on now, and I think Shaun's going to pick up on the plans for Mbelele Shallow.
Yeah, thanks, Alf, and I think that's kind of a great scene setter there in terms of what we're trying to do here, which is obviously this is a greenfield exploration project, and we're pioneering a whole bunch of things in Tanzania, but there's little doubt that we're in the right place. We've got the right address. We've got the early mover advantage, and that's allowed us to put our foot on all the good acreage. And I think with some continued exploration, there's some big targets out there still to be found. But in the meantime, we've identified this gas cap at the top of the Mbelele structure, and we see that as a great opportunity for a short-term monetization project for ourselves. Part of the reason that we're excited about this is the data points that we identified as we were drilling Mbelele 1. And I guess just to kind of keep the context here, remembering back to this was the very first well that we drilled in a 2-well program. Literally on the first day of drilling that we started to see this quite significant gas bubbling up through the drilling mud. And the little graphic that I've got there is the measurements of that as we were going along. So the dotted vertical black line is atmospheric. The blue line represents what we were measuring as we were going along. The red line is a different piece of equipment, but measuring the same thing. So you can see that some quite significant spikes in helium concentration detected, very significant above background. But I guess trying to put that into context, if you look at the data point at the bottom of that, where we were actually able to take a sample, and what we saw as we were drilling, yes, there was a spike above background level, which is great. And then, but when we actually sampled it, it was significantly more parts per million than what we were seeing in the mud logs. Unfortunately, the way we were set up to drill, we weren't able to take any of those samples in that higher level where we saw the helium spikes, and obviously that's the purpose of what we're going to go back and do. Part of the other data that we've gathered is obviously mud bubbling in your tanks needs to be stopped, as it's a danger to the drilling process. So the mud weight was increased until that pressure was brought back into balance, and from that we're able to calculate an indicative column height of about 20 metres. So that's the size of what we think. The reservoir is there, and of course the on-site well site geologist was examining all of the returns as they were coming back up, and obviously seeing sandstone reservoir style rocks through that zone as well. So we're pretty confident that we've got a decent and potentially highly productive gas column there. And we've then, with all of that data that we've gathered, done some modelling in terms of some reservoir modelling to have a look and see how we think that's going to flow. And based on the permeability and porosity data that we've got, we see this as very high flow potential reservoirs, which is quite important. The graphic to the right there, basically based on all those data points that we've got, we've then been able to map the structure, and that's what that represents. And the good thing here is that this is all onshore, easily accessible. Definitely very cooperative landowners who are keen to see us active in the area. So all positive. Just a little bit more about the gas cap itself, and I'm sure a lot of you have seen this. And as I say, estimated 20 metre free gas column, roughly 9 by 3 to 4 kilometres in length and width. Kicks off at about 85 metres down to 110 or so. Is kind of the zone of interest for us. As I say, very high permeability and porosity, so very high flow potential, given those young neogene sands that are there, and easily accessible from the lake, from the shore. So simple, shallow drilling that's going to be a very simple, low-cost development if we get to that point. So in terms of the appraisal plan, and I just wanted to show some photos on the side there, and which I think are useful. And these are recent, just from the last couple of weeks. When we talk about access issues, what we're talking about, and people need to bear in mind that this is a very remote part of Africa. We have the escarpment that runs along beside us, and then we're sort of in between the escarpment and the lake. And so when they get their heavy rains during the wet season, these creeks, which are typically dry, will then flow. Most of the crossings are not bridges in per se, but this style of crossing that you can see here, which is a concrete culvert. And unfortunately, during those heavy rains, it sometimes gets washed away. Can roads are out there now. I mean, this is an annual process for them. We're obviously in close contact and coordinating with them about getting this work done, so we can get access again. And as soon as that's in play, we'll get going. So in terms of what we're going to do, we're going to drill an offset well to the Mbelele well. So we'll be on that same well pad, 10 metres or so away from where we drilled the original well, and where we saw that data that I explained before. We'll be drilling to about 125 metres, so very, very shallow. We've got guys have done an excellent job in working up a plan for us, so we can test all of the various things that we want to test as part of this program, using a specially designed wellhead that we can then test pressures and flows and helium concentrations and so on and so forth. So definitely going to be a well thought through and easy to execute plan for us. We're contracting with a low-cost Tanzanian drilling rig. We're in the final stages now. We have a couple of parties that we're still in a short list that we're looking to lock down. There's a couple of, I know a lot of people have been concerned about the exploration wells were very expensive, and they were, with good reason though. And why we think we can do this so much cheaper. And there's a number of reasons for that. Obviously, using a local drilling contractor is one of them. The fact that they'll be able to mobilise and demobilise in country, so we don't have ships and all sorts of other imposts that come with bringing someone from outside the country. They'll work on a meterage rate, so we'll pay them per metre drilled, not on a day rate, which is what we had with the other contractors. We'll just be using the University of Dar es Salaam, who are excellent people and were involved in the Mbelele 1 and 2 test work. And so the cost of engaging those guys is significantly less than a Schlumberger, who were used with lots of expensive equipment, which for downhole measurements and sampling and other things that we won't need for this process. So it is going to be a very low cost process. I did mention at the Sydney Resources Conference at under $1 million for this. We're now sort of starting to find that up. Obviously, we're still finalising all the arrangements, so I don't want to give too much away, but our budget all in for everything that we're going to need to do here is about $500,000. When, obviously, that's our objective is to get in there and do this as soon as we can. But per the, oops, not sure why that jumped. Per the slides there, you can see there's a bit of work to do for the roads, and we obviously want to make sure that that's all done and it's safe to access. So as soon as that's done, our estimate at the moment is it's going to be an August timeframe. We'll mobilise the equipment and bring it in. And I suppose the other point that sort of goes with the local Tanzanian drilling rig is that off the top of my head, it was about 38 to 40 semi-trailer loads worth of equipment that we needed to bring in to do the exploration wells. This will be 3 to 4 semi-trailer loads worth of equipment for the rig that we'll be using and the equipment we need to do this appraisal work. So a much logistically easier exercise. And certainly our objective is to get in there as quickly as we can. But at this stage, it looks like it's probably going to be sometime around August. Commercialization. So obviously that's the reason we're doing this and why we want to do this test work, because there's a number of factors that you need for a successful commercialization to happen. Obviously, helium concentration. Obviously pretty confident based on the data that we've already got that'll be achieved. Reservoirs that flow and obviously high flow is better, and we certainly see high potential for that to be the case. Easy access, so we can do the development side of things. Again, I think we tick that box, and certainly supportive regulatory environment. The government and local government, regional government, the federal government are very supportive, very keen to see us get this up and running, and there's potential new significant industry for Tanzania. And finally, an offtake partner, and we have a company that we've been talking to for quite a while, who are very keen to be involved and to help us get this up and running and to take the helium. And it certainly fits well into their portfolio and their desire to see some diversification, both geopolitically and certainly in terms of something that's not associated with hydrocarbons as the primary reason that it's being produced. So what's going to happen if we post successful well test? So fingers crossed, everything works how we expect it's going to work. We get good quality flows with good helium concentrations. What's next? So probably take us about 6 months to, and in parallel, a number of these activities, of course, develop our field development plan, which in theory should be relatively simple and straightforward. Probably the more complicated part is the finalising the design and work around the gas separation and liquefaction plant, albeit that this is going to be a pretty simple gas stream, just being nitrogen and helium, so no complicated technology involved. Fundamentally off-the-shelf equipment, but there's some sizing and other issues that will be involved. The long lead items, and in fact, the compressors that will be required. And then, of course, the offtake agreement with that partner. So we have given ourselves 6 months to get all that done. They'll obviously need to get their own approvals, etc. as well. So in theory, by the end of this year, early next year, we'll be in a position where we've got all the components locked in. Then be a matter of pulling the trigger on constructing and then installing, and us doing the drilling the wells and doing the field development. And based on how we go with the appraisal work, it's highly likely that the rig that's doing that appraisal work will be satisfactory to do the development drilling activity for us as well. All of that's probably going to take about 18 months. As I say, the long lead item, probably the construction of the compressor plant. The offtake partner that we're talking to are offering to fund the downstream component so all of the gas separation and liquefaction plant, and then we'll repay them through the gas sales as we monetize that plant. So a relatively low cost development that won't require big capital raising. So that's the nuts of what we wanted to update everyone on. Hopefully, I think that's answered quite a few of the questions that we had, but possibly some others. So I might just hand back to Gareth and see if he's got some other questions for us.
Yes, thank you, Shaun. There's been a long list of questions received throughout the week in the lead up to the webinar. I've done my best to, I suppose, aggregate those into 10 or so questions, but certainly I'd look to attend to any questions that aren't answered today post the webinar. But I'll kick off with perhaps a question for you, Professor. In your experience, how do you rate the company's position in Tanzania?
Thanks, guys. Look, it's a great question. So if you'll remember where we are in the exploration study, it's essentially a real estate game. What the team's managed to do is target right down on the right acreage, get 100% blocks in the right place, where the right plays are, where the right structures are. So it's a pretty solid position, really quite ripe for co-investment in addition to our chasing the many prospects and leads. So I think that the early first mover advantage of Justin and the team moving in there have really pegged that right. And as I say, we're now sitting on 100% stuff in the best place that we know of.
Okay, next question, perhaps answered in the presentation. Post the successful appraisal of Mbelele, you'll be looking to progress that to monetisation. What are the other longer term plans for your activities, Shaun?
Yeah, okay. I mean, as you say, the early monetisation stuff, I think we've dealt with that. But as outlined through the slides that Alf went through, there's some very significant opportunities for us within the portfolio, and we'll be looking to continue our exploration activities within those areas as well. Most likely, first step will be some more 3D seismic, fly some more gravity gradiometry. So get on with those things, and then look to try and drill some of those other targets. And as Al said, the opportunity exists really for some co-investment partnering on that side of things, and we're certainly trying to progress down that path as well as a sort of a longer term strategy. But I think the evidence that we've gathered so far and all the work that the team have done, it's clear that this is a prolific helium producing system, and one of the big risks whenever you're chasing anything is that you can have the best geology in the world, but if you don't have the product that you're looking for is not being produced in that system, then you're wasting your time. And so clearly we've ticked off that risk.
Next question. Why couldn't the appraisal work have been done simultaneously with last year's drilling campaign?
Yeah, I can take that, Shaun. It's a great question on the face of it. So if we go back to where we were, our aim with those two wells was to establish, if you like, deeper and therefore perhaps higher pressure targets. And so the wells were designed to go for those high pressure targets, obviously safety and within proper standards. What we found with this shallow gas bubbling was actually quite a surprise. And so in order to protect the deeper targets, we had to quickly case it off. And then at that time precluded the chance of taking samples at that depth. Those of you who are familiar with the drilling process will know that shallow gas is typically something we are trying to avoid, ironically. As they come to quite a surprise to us that there was so much of it around. So in essence, it's a technical and safety matter, and also to protect at the time those deeper objectives where we really needed to get that deeper data.
Okay, an economic question, I suppose, Shaun. There is currently a loan outstanding on which the company is paying about 40%, if that's accurate. When and how do you plan to pay out this loan?
Yeah, so the VAT loan is designed to be repaid through the refunds of VAT that we get from Tanzania. So obviously, as I noted before, we got the first refund last week or early this week. It was specifically excluded from being required to repay that loan, and we've lodged the next claim, which takes us up to the end of 2023, which is another 3 million. So once we get that back, that'll go directly to repay the loan, and then there's further VAT obviously being paid on an ongoing basis that will continue to claim back that'll repay the loan. But yeah, clearly our objective would be to try and clear that loan as quickly as possible, but fundamentally it's structured around the VAT refunds.
Probably an open-ended question. Why the low stock price with such promising prospects?
Yeah, I mean, you know, I'm a major shareholder too, and I'm pretty disappointed with where we are. But at the end of the day, from the company's perspective, really all we can do is we set out the objectives of what we were going to achieve, or the activities that we were going to achieve. We worked our way systematically through a process of gathering data. So we started with the Amoco data set, 2D seismic, and a couple of wells that were drilled in the 80s. We then built on that flew our own gravity gradiometry, did a whole bunch of soil sampling, took 3D seismic, and then ultimately drilled the 2 exploration wells in the area that we thought was going to be most productive within the boundaries of the capability of the equipment we had, and also recognising that, you know, the first 2 wells in a brand new basin in a remote location, we wanted to try and keep it as simple as we could. And then the results were the results. Obviously, people had expectations of something different to what we got. I think there's certainly still very, very, very encouraging, and have given us a lot more insight into the basin, and the work that Professor Garnett and the team have all done certainly is bearing that out. And obviously the shallow gas cap being a little bit unexpected, but certainly still a great opportunity for the company, and a potentially highly valuable, you know, probably orders of magnitude above where our current share price is. But yeah, as I say, I think, you know, it's greenfield exploration. We set out what we're trying to do, and I think we've gone and done all the things we said we were going to do, and that's really what our role is.
If a gas discovery is declared, would the cash generated from commercialisation meet all reasonably expected future operating costs, excluding major capital works?
Simple answer is yes, absolutely. Once if we successfully test Mbelele and can get that project into commercialisation, once that's up and running, that will generate significant cash flow for the company, and clearly cover all of our operating costs plus some. So yeah, absolutely, and that's part of the objective is, you know, get that up and running in parallel to wanting to continue the bigger exploration activities.
And how advanced are negotiations with potential off-takers?
Yeah, so I mean, we've been talking to them for quite a while. As I say, they're very, very keen for us to be successful for a whole range of reasons, not the least of which the potential to open up a whole new helium province that they see, you know, the potential that exists within Tanzania, something that's not being produced for the purposes of producing conventional gas and just a byproduct, which brings a lot of advantages to them. And ultimately where we are now is we've both got some things that we're working on, and the key bit of information obviously for us is to do this appraisal work and get those results, demonstrate hopefully that we've got commercial flows with that, and then using that data to move towards a full-blown project.
And that probably leads to the next question. Are there any non-dilutive funding avenues available to the company?
Well, the reality is that everything's dilutive. When you fund, it just, is it dilutive at the share level, at the project level, or at some other level? So there is no magic non-dilutive fundraising, but there are certainly opportunities that we're looking at. For example, the off-taker funding the cost to construct and install all of the downstream processing equipment, which would obviously be a great mechanism, and then we would just repay that back through the gas stream, the gas sales that we do later on. There's certainly, as we said, for the exploration activity and the deeper targets and other things that we want to do, we're definitely actively exploring to see whether there are partners and others that we can get involved in that process to help fund that. Again, that's dilutive at the project level, not at the share level, but it's certainly avenues that we're exploring actively at the moment.
In last year's annual report, there are a number of steps the company is seeking to achieve. How's the progress been on those steps?
Yeah, well, I think I kind of went through that just a minute ago. But basically, we had outlined that we were working through an exploration program to, as far as possible, de-risk ahead of drilling the 2 wells, and I think we've done all of those things we said we were going to do: seismic, gravity, soil gas sampling, etc. So, as I say, that that's our objective, is to outline what it is we're going to do and then go and do it. Similarly with the appraisal program, I guess we're outlining what we plan to do there, and we're moving now to make that happen.
Okay, questions just come in for Professor. The deeper targets, just can you talk through maybe the scale or scope or potential of what you're seeing there?
Yeah, indeed. If you remember, we have these four areas, sort of West and East Rukwa Lake, Northwest Rukwa onshore, North Nyasa offshore. Sorry, North Nyasa also onshore. And of course, the onshore is interesting for us because the plays exist and because both the seismic and the drilling are cheaper. But if I look across those areas, roughly speaking, about 60% of the prospective volumes, these are internal estimates now rather than the previous ones, but roughly 60% sitting in the Karoo, in the deep stuff. And it will be in slightly bigger structures and slightly higher, but actually much higher pressures, and so flow rates will be higher, all else being equal. And so if we're looking at, again, those 4 areas, say a little over half, 60% of the resources rather, are in the Karoo. And of those areas as well, about probably the best one is the East Rukwa Lake. The actual prospects are offshore, and we're looking now whether we can drill and deviate it from onshore. So we're looking at a total prospect inventory there of around about 296, 300 BCF. About 60% of that's on the East Rukwa. The rest is split fairly evenly. And again, most of the richness is in terms of the economic richness, and also the resource richness is in the Karoo. So the total inventory roughly 300 BCF of helium. That's not discounted for gas. That's helium. 6% on the East Rukwa, and most of that is in the Karoo. And one of those, actually Chile, is geotechnically ready. It's not drilling ready, but it's geotechnically ready to drill. In terms of, we know where it is, and we know what the structure looks like, and we know where we put a well. It's a little challenging on the east side, just to be clear, which is why the onshore prospect play segments are so interesting. The onshore gives us lower risk and cost exposure. But at the moment, the real jewel, all else being equal, is that East Rukwa, slightly offshore. It's about 3 or 4K offshore to the peak of these targets.
And I suppose a question on many people's lips is, what's the earliest possible date for a first resource estimate?
I think we're going to wait. Obviously, the resource estimate costs us money to get done, an independent resource estimate. We're obviously doing our own internally, and that includes an entirely new way of estimating helium concentrations with depth, which we've developed based on some really quite fundamental physics and chemistry done by the University of Queensland, and building on previous work done by Oxford. So we've got a new methodology and calibrated methodology for helium concentration with depth. We've already explained that with our reserves auditors because it's new to them, so we're having to go through some real technical co-learning, if you like. So we're going through that. We've been through that already, but I think we won't go through another independent research until really we've seen the Mbelele appraisal results.
Okay. And is there a connection between commercial flows and the ability to declare a discovery? Is there a range you look for, or is there a science behind that?
I can answer that briefly. I mean, obviously in the traditional oil and gas world, under PRMS, there is for gas. You have to declare some sort of marketability for gas. PRMS doesn't quite apply to helium, and so there's going to be some very careful wording. Where we're following PRMS principles, we're going to have to be some careful wording about when we decline. But of course, commerciality is as much about rate as it is about concentrations and volumes. Which is why this Mbelele shallow is so interesting, because that's, you know, Darcy permeability in places. So we think we will be able to mention certainly contingent resource in that terms, and then reserves later. And we're just going to have to be extremely careful how that's explained, because it's not quite PRMS.
And I suppose the thing that we could I suppose touch on again was just how special the geology is in that region, and how it lends itself to being commercial. The porosity.
Yeah, I can say a little bit if I can talk through the nuts and bolts of it. You know, I'll just talk through the life cycle of a helium molecule. Almost, it's almost. So we've got this old basement sitting there for 2+ billion years, chucking out alpha particles, which are helium nucleus, capturing electrons, sitting there doing not very much in the matrix, if you like. As the continent bends and breaks and fractures, it gets mixed into water. It gets very rich, hot helium fluids. And then what you're really looking for is the time for that to do, because of course uranium has a certain decay rate. So the longer time you've got, the better. And then the more of the bending and twisting and shaking you've got, the better. And we've got several phases of rifting here. Now, on top of that, then we've got this wonderful Karoo sandstone sits on top, right down directly on top of this fractured basement, which then pumps out hot uranium-rich fluids. In fact, just south of the North Nyasa project, over the border in Malawi, there's actually a uranium mine proper in the Karoo sediments itself, which is actually uranium grade, or 300 ppm of uranium actually. And so we expect not only that our basement is rich in uranium, but then in certain parts of Karoo is too. And then on top of that, we've got a little bit of coal in the Karoo, which pushes out helium, which pushes out methane. That helps us to gas phase. And then we've got a seal over the top, and then some structures due to the rifting. So that all sort of adds up. And then the stacked plays above, there's access routes to that for helium via faults. And that's evidenced by the fact that there are springs in the area related to faults. And so helium-rich fluids are moving up faults and can be captured at those overburden areas. We still think that Karoo is the richest, but as Mbelele showed, it's not by any means the only cab of the rank.
Okay, that brings us into the final of the questions. There will be, I'm sure, more questions that attendees have, and by all means, I'll do my best to get to the rest of those questions and share those with the team. But for now, I'd like to thank Shaun and Professor Garnett for their time today and joining the webinar. So yes, so please continue to send the questions through via our website or my email, which is at the bottom of most ASX releases. All right, that brings our webinar to an end, and a recording of the webinar will be issued as well. So if you weren't able to get it today, there'll be opportunities to access that after today. All right, thank you, everyone.
Thank you.
Thank you.